Hi there, this is Bob Martin, General Manager of HDD Broker, and this is yet another of HDD Broker's video blogs. Just what is the Section 179 deduction? Well, most people think the Section 179 deduction is some mysterious or complicated tax code, and it really isn't. Essentially, Section 179 of the IRS tax code allows businesses to deduct the full purchase price of qualifying equipment and/or software purchased or financed during the tax year. It means if you buy or lease a piece of qualifying equipment, you can deduct the full purchase price from your gross income. It's basically an incentive created by the US government to encourage businesses to buy equipment and invest in themselves. Now, several years ago, Section 179 was often referred to as the SUV tax loophole, or the Hummer deduction, because many businesses have used the tax code to write off the purchase of qualifying vehicles. Although large businesses also benefit from Section 179 or bonus depreciation, the original target of this legislation was much needed tax relief for small businesses, and millions of small businesses are actually taking action and getting real benefits. Essentially, Section 179 works like this. When your business buys certain items of equipment, it typically gets to write them off a little at a time through depreciation. In other words, if your company spends $50,000 on a machine, it gets to write off, say, $10,000 a year for 5 years, and these numbers are only meant to give you an example. Now, while it's true that this is better than no write-off at all, most business owners would really prefer to write off the entire equipment purchase price for the year that they buy it. In fact, if a business could write off the entire amount, they might add more equipment this year instead of waiting over the next few years. And that is the whole purpose behind Section 179, to motivate the American economy and your business to move in a positive direction. For most small businesses, adding total equipment, software, and vehicles totaling less than $139,000 in 2012, the entire cost can be written off on the 2012 tax return. Now, Section 179 does come with limits. There are caps to the total amount written off, and that's $139,000 in 2012, and limits to the total amount of the equipment purchased, which is $560,000 in 2012. Let's take a look at an example. If you had an initial equipment cost of, say, $50,000, your first year write-offs would look like this. Your Section 179 deduction, $50,000. Bonus depreciation, 0. Annual standard depreciation of 20% for years 1 through 5, $0. Total deduction in your first year, $50,000. So your tax savings in a 35% tax bracket, $17,500. The bottom line here is that your $50,000 piece of equipment now only cost you $32,500 after tax savings. In summary, now really is the best time to be purchasing equipment, both new or used equipment. The deduction expires at the end of 2012. The 2013 deduction is going to be significantly reduced. Be sure to contact your HDD Broker sales representative to find out what's available and try and get it purchased before the end of the year so that you can take advantage of it. As always, we really do recommend you contact and consult your tax attorney to find out what solutions are best for you. If you have any questions, please feel free to contact us at any time. info@hddbroker.com. Thank you very much for your attention and have a great day.